Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Coal Energy Company Limited annual report. China Coal Energy Company Limited offers a diverse range of services and products across various sectors. The company operates through four main segments: coal, coal chemical, coal mining equipment, and finance. The coal segment involves the mining, production, processing, trade, and sale of coal in China and internationally. This includes the provision of after-sales services for coal mining machinery and equipment. In addition to coal-related activities, the company also engages in thermal power generation, aluminum processing, and equipment importation. It offers a range of coal chemical products such as polyolefin, methanol, and urea. The coal mining equipment segment involves the research, design, development, manufacture, trade, and sale of coal mining machinery and equipment. The company also provides financing, tendering, and waste dumping services. Furthermore, China Coal Energy Company Limited offers a range of other services including bidding services, railway transportation, metallurgy, production and storage of dangerous goods, and the importation of equipment and accessories. China Coal Energy Company Limited market capitalization of $242 billion is significantly larger than the average industry peer of roughly $2 billion. This shows that China Coal Energy Company Limited holds a significant advantage in their industry. China Coal Energy Company Limited trades at a higher price-to-earnings ratio of 12 times and a higher price-to-book ratio of 1.07 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 46% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 3.21%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through an analysis of the key factors that have impacted a company's financial performance. On the positive side, revenue growth has been driven by several factors, including a significant increase in coal segment revenue, finance segment revenue, and sales of coal chemical products. The sale of electric power and agent services also contributed to revenue growth. Additionally, the company's increased coal production capacity and commercial coal production have led to higher sales volumes. However, there are also several drivers that have contributed to revenue decline. These include a decrease in coal segment revenue, finance segment revenue, and gross profit from coal operation segment. The decline in material costs and sales tax and surcharges has also had a negative impact on revenue. Furthermore, weak demand for coal products and low prices have led to a decline in revenue. In summary, the primary drivers of revenue growth or decline are largely driven by changes in market conditions, production capacity, and sales volumes. The company's ability to adapt to these changes will be crucial in determining its future financial performance. The company's net income and profit margins underwent significant changes over the period. Initially, net income increased by a substantial 232.6% to RMB 29.7 billion due to a decrease in unit selling cost of self-produced commercial coal, which led to an increase in profit by RMB 0.2 billion. However, this trend was short-lived as net income began to decline. The company experienced a decrease of 22%, followed by further declines of 28.8% and 14.9%. These decreases were largely attributed to the downward trend in commercial coal selling prices and decreased gains from non-operating income and expenses. Profit margins also fluctuated during this period. While gross profit margin increased by 4.8 percentage points to 21.2%, It also decreased by 1 percentage point to 18.3% at other times. The reasons for these changes in profit margins were largely driven by the same factors that affected net income, including changes in commercial coal selling prices and non-operating income. The company is indeed generating positive operating cash flow, as evident from the various financial metrics presented in the summary. On page 9, the operating cash flow is reported to be a positive RMB 34,143,372. Similarly, on page 12, the net operating cash flow is also shown to be positive at RMB 18,412,744. Furthermore, the data on pages 30 and 31 indicate that the company has experienced a significant net cash inflow from operating activities, with an average annual amount of RMB 39.7 billion. This trend continues on page 34, where it is reported that the net cash generated from operating activities was both positive at RMB 197.92 billion and RMB 341.43 billion. Although there is a slight decrease in net cash inflows generated from operating activities on page 47, with an amount of RMB 29.792 billion, this still remains a positive figure. Overall, the data suggests that the company is consistently generating positive operating cash flow, indicating a strong financial position. The company's debt level and interest expenses have undergone significant changes over the past year. On one hand, the total debt has decreased by a substantial 67.3% from RMB 12.972 billion to RMB 971 million, indicating a reduction in financial obligations. However, this decrease is somewhat offset by an increase of 13% in borrowings, which may suggest that the company is still taking on new debt. In terms of interest expenses, there has been a notable decline. Interest expenses decreased from -3,426,329 in the previous year to -2,550,555 in 2024, indicating a reduction in financial costs. Furthermore, total interest expenses continued to decrease in 2025, dropping to RMB 149,057 from RMB 535,888 in 2024. Overall, while there are mixed signals regarding the company's debt level, the decline in interest expenses suggests that the company is making progress in managing its financial obligations. The company's performance can be analyzed based on its various segments and regions. In terms of well-performing segments, the coal products segment and intersegment equipment segment stood out with significant revenue and profits. The coal segment also performed exceptionally well due to its leading position in quality production capacity, coal resource reserves, and technologies and techniques. Additionally, the company's coal chemical operations and power generation, coal power business, segments showed impressive results. The regions that contributed to the company's success are Shanxi, Inner Mongolia, Jiangsu, and Xinjiang. These areas demonstrated strong performance across various indicators. On the other hand, the coal mining segment struggled with low revenue and significant losses. The others segment also underperformed compared to its peers. Unfortunately, there is no specific information available on poorly performing regions. Management is optimistic about the company's future prospects, citing confidence in securing sufficient capital funds. To achieve this vision, they plan to implement a lean management approach, which involves streamlining operations through standard cost management and process optimization. This will enable the company to enhance its competitiveness by reducing costs and improving efficiency. In addition to these internal efforts, management is also adapting the company's strategy to align with changing market conditions in the power industry. Specifically, they are shifting focus towards renewable energy sources, emphasizing cost control measures, and expanding the company's comprehensive energy service capabilities. This strategic pivot aims to position the company for long-term success in a rapidly evolving market. The company's financial records indicate a clear history of dividend payments. On multiple occasions, it is stated that the company has indeed paid dividends. Specifically, in 2024 and 2025, the amounts paid out were RMB 10,288,723 and RMB 5,621,673 respectively for 2024, and RMB 3,418,258,000. 200 as a final dividend for 2024 and RMB 2,197,579,500 as an interim dividend for 2025. These figures demonstrate the company's commitment to distributing profits to its shareholders through dividends. That concludes the financial summary for China Coal Energy Company Limited. Feel free to comment below, and I will be happy to answer them when possible.